Yo, what's up, everybody? What is up? Welcome back to another episode of Bullish Top 5 Stocks I'm Watching. We're starting this on Sunday. It's your boy TSD, like I said, back with Bullish. So let's just get started. But before we jump in, I appreciate all the people taking some time to watch. I hope it helps somebody. Definitely helps me kind of plan out my week, plan out my trading strategy, definitely for the week going into it. There's thousands of stocks you could possibly watch. I'm trying to just compile from different data sources. And by data sources, I mean like from a technical chart standpoint, from like kind of earnings that are coming out, IPOs that are coming, news that I'm hearing, just trying to look at like, you got thousands of stocks trying to just make, a handful of them that I can kind of take a hold and grab onto and then watch over the week. These are things I'm watching, not necessarily playing. But yeah, I appreciate you guys tuning in. I'm pretty sure it's just one person watching it over and over, but hey, hopefully it's helpful for you. Definitely helpful for me. But yeah, if you could take a time and just, subscribe here on YouTube, would definitely help out. Or follow my social media, basically real_bullish anywhere. IG, StockTwits, Reddit, Twitter, pretty active on there. I don't think I have an IG yet, but maybe I'll just start one up just to kind of see how it goes. Another thing, hey, this is just, this is not trading advice. Like I'm not qualified to say, hey, like do this, but it's definitely something that I'm watching. And that's kind of more the perspective I'm coming, not from saying, hey, do this, do that. I'm not qualified to do that, but hey, do your own due diligence and hopefully you kind of find something interesting or, if you agree, if you disagree, hey, let me know. But at the same time, this is kind of how I'm watching the week, but let's jump into it. It was a good week for me overall and my picks for the most part. Watch that video. I'll link it at the end, but basically kind of see what I was playing last week. I didn't have a Thursday recap. I'm trying to figure out what to do. Maybe I'll just start like a podcast and do it on Thursdays or something like that. I've done a podcast before. It's a little difficult. Honestly, like YouTube is super easy. I just upload shit. I don't even edit. If I fuck up, I fuck up. But, podcasting is a little bit different. A little more goes into that. Maybe I'll just start, I've always wanted to kind of circle back with that. So maybe start one of those up. But anyways, if you want to see kind of what I was watching last week, I'm going to actually recycle some of them this week. But still, if you're interested, hey, check that video out. Let's just jump into it right now. Hopefully you can see my screen. If not, I'm kind of fucked, like I said. But basically, right now I'm bringing up QQQ. And basically this is kind of like, there's, people follow different like indices for different things. QQQ is for, one I watch for, tech overall. There's SPY and DJA or something like that. And basically these are three that I kind of look at just to kind of see in general where the market's heading. These are ETFs that like shadow the larger indices and shit. But basically what I wanted to show here is that, hey, the market is still kind of in a correction territory, definitely. And what I mean by that is you definitely see this really hard sell-off around the same time on 9/2. The market, and this is specifically for tech or, QQQ, but, after that point, hey, you were in a really hard down sell, and we're still in that for the most part. And it's natural to me. It's consolidating. It's maybe some profit taking. And to me, the reason I say it's natural because, hey, it's kind of that really low for the past 2 months. It's been that kind of low period in the year. We got a lot of shit going on. Earnings is about to kick off. Earnings seasons for the fall is about to kick off in the next couple weeks. So that's going to be great. Maybe it kind of kickstart some of that. But also, we have elections coming up. A really like weird election season too, where we don't know how we're going to vote, blah, blah, blah. How's that going to shake out? We got COVID still going on, of course. We got the whole stimulus uncertainty. We got the market was just ripping before kind of like that sell-off that we saw that started, 9/1, 9/2. The market was just in a rip after really shutdown started in mid to early March. So taking all that consideration, hey, correction I think was expected. We were getting pretty far extended out. So hey, it's going to happen. But the great thing not the great thing, but I'm cautiously optimistic for this next week because futures, the last time I looked at them, I hadn't looked at them in the past few hours, but futures, when I looked at them like yesterday, they were pointing in the right direction. Futures, take them with a grain of salt. When shit opens up for the day, into the weekend and into the trading day of the actual thing, futures are kind of directional, but hey, shit can change. But also when you look at the chart, so I'm just looking at QQQ, like I said, that follows more the NASDAQ. You see a few things that are interesting to me here. We definitely broke under important support line. This is the EMA 50, right? So we broke below that, and it was kind of like, hey, what the fuck is going to happen, right? We were trending on this 10 for a while. That was great. We broke that. We broke the 25. We hit the 50. The next closest one was a 200, and oh shit, but the great thing is, hey, we broke it, but we found some support here a couple times. Hopefully this double bottom picks up. It tested that 260 level a couple times here, and the great thing about that is it did find some support, and hopefully we can squeeze back up here to start making some new highs or something. But basically, you see some volume coming in, which is great over the last couple days, which is awesome. You see RSI picking up here, starting to pick up. It kind of hit that lull of 41, so it was trending more to the oversold area, but it's starting to pick back up again here. And as we can see, like this, and it says up to 80, so we have a lot of room to play there. But also importantly is the moving average convergence divergence picking up again too into that bull territory from the bearish territory. You see, it was kind of like it was diverged for a while, and hopefully now we can kind of come to some type of convergent movement and then trend up here. But the great thing is, over the last couple days, or last day actually, really, we definitely saw a really strong green candle versus kind of like these little wimpy ones that are just kind of like a little hammer there, but still these little wimpy lines. We have some power come in, so hopefully that holds trend, but we'll see how it works out. But anyways, that's just basically looking at more of the tech market in general. So anyway, jumping into that's not even top 5. I still got some top 5 to play. Let's go into it real quick. I'll try to make it as quick as I can, but I still wanted to hit some up. And if you know me, I love me some Tesla. I'm just going to say, hey, I'm a Tesla fan. And even after Battery Day going into it, I'm even more of a Tesla fan. And I think Jim Cramer said it best. Hey, for Battery Day, people who loved it more. People who hated it more. And hey, you can say whatever you want about Jim Cramer. This guy makes some money for himself or for his friends or whatever, but he's still, I think that he was right about that one in that sense. Hey, if you loved it before, you loved it even more after. If you hated it, you hated it more. The market in general seemed to hate it. Battery Day, as we talked about last week, was September 22nd. And you kind of see, it basically rose and fell really hard a few times. And what I mean by that is if you look on Monday, and this was Monday, I know that because this pattern right here, Monday opened up and you see this really, really hard dip all the way down to 407 basically. And to me, I was loving that shit because I knew it was going to come back up eventually. I don't know exactly what that sell-off was for. It was probably just trying to shake out, money markets. I don't know what exactly it was, but what's interesting to me is, hey, I was like, perfect. Hey, let's squeeze back up, shit, almost $50 you could make off of, that one movement here. And you kind of saw it test up. And the reason why I was kind of expecting that was going to happen, honestly, was because we haven't been able to break this 450 area for a while. And if you look back, oh shit, what'd I do there? If you look back over, a few days or whatever, yeah, that 450 area was really, really strong resistance a bunch of times. So we weren't able to break it. We weren't going to be able to break it then. If smart money was going to say, okay, cool, yeah, when we squeeze close to that, hey, it's probably time for a sell-off. But I knew that it was going to, I figured, I didn't know it was going to bounce back, but I knew there was going to be some hard sell-off. I didn't expect that, but it was great buying opportunity if you were in for that. And you wrote it up here back to exactly the level it was at before. And then Elon came out with some tweet that was like basically like tempering expectations for Battery Day, and people hated that, shitted out here. And you definitely saw Battery Day come and go. The great thing about that is, it came, again, this is no coincidence. About 450-ish, it started to sell off again really hard, and that extended, over multiple days. We kind of saw, and people were kind of freaking the fuck out about it. Oh my God, Tesla down to 200, whatever the fuck you want to say. It did dip real hard, and this line is important because 363 was actually, if you look at the day over day chart, this was an important area, and if we dip below that, it was going to be interesting to see what was going to happen. Let's just say, but hey, I was more like, hey, fuck it, people were selling it off. Great, like let's race to this line. Let's race to this 50 EMA, looking day over day for the past year, and see what it does. And what it ended up doing was using that as support to kind of bounce back up. And we saw that over Thursday and Friday. It did help that we came out with some. It did help that Tesla Battery Day, to me, it was fucking great. Like it wasn't like what people expected in terms of like, oh, a fucking million, billion, trillion mile battery. People the market went in like buzzwords and shit. But when you look into it, and I've actually watched it 2 or 3 times. I haven't really finished it. When I was watching it in real time as it was happening, I was working and stuff, so I really was trying to just like watching from a side. But when you break apart like what they did, I think it was just very technical. There was no huge buzzwords, but I thought it was great. It's very technical, but also he was very realistic with his timelines. And I think that was something that people hadn't seen specifically from Tesla or Elon, like kind of have more reasonable timelines for things, which are closer to the real world. So I thought that was great, but the market didn't like it as much. But what was interesting following that the battery day was the price target increase that came in from Deutsche Bank, or however you say that, up to 500. So I think that was great. But in battery day, he kind of glossed over a bunch of important things. He said a bunch of stuff. He kind of threw in there that he expects deliveries to go up 30 to 40% over next year. So that bodes well for this year. The remaining that goes into next year, looking over 30 to 40% increase for deliveries. He also glossed over, like, they asked him about Cybertruck or whatever that truck is. And he just like, oh yeah, about 500, 600,000 pre-orders. That's huge, because when you put that in perspective, the F-150 is actually the best sold car or truck in America, and they sell 900,000 a year. And Tesla, without even producing one yet, is already like 5 to 600K expected with pre-market or pre-orders and shit like that. So I thought that was fucking awesome as well. A couple other things he was talking about were just like the whole like autonomous driving and stuff. He kind of just glossed over that they're in the beta of a complete rewrite of their software, took it from the ground up, started from scratch, and they're already in the beta version, releasing in the next month. So I think that's a really cool catalyst. So there's another catalyst coming out this week. Is expected. The deliveries for Q3 report numbers are expected before the end of the week. So we'll see how it turns out. But the reason why I'm keeping Tesla on here, because one, the reversal, two, battery day to me was a success, but the market didn't like it. There was a real hard sell-off coming down, down here, for also really important support here at a key support indicator, bouncing back up. We're seeing volume coming back. So from a chart perspective, from a tailwind, from a catalyst perspective, I really like it coming into this week, especially since we tested this 50 EMA and it did hold there. I thought that was awesome. But also on 9/23, basically the governor of California came out and said, and that was kind of like, I think, softening the blow a little bit from battery day 2. He basically came out and said, hey, by 2035, there's a mandate that there's going to be no new sales of gas-powered vehicles. So that doesn't say you can't sell your old one, or maybe even leave the state, buy one, and come back. But still, like, that's an indicator, I think, of where the nation is going to start going. California is usually on the forefront of stuff like that, to me at least. And then you kind of see that propagate throughout the other states and shit like that. But I think that was important, because when you look at the people that are competing with Tesla in terms of the EV space, which I love, the EV space is super hot. It's ramping up. There's no one close. Who was close? GM, that tried to do the whole like EV play with Nikola. What happened to Nikola? All this shitty news where the CEO is gone, the CFO is gone, or whatever. Like they had this whole controversy going on. But that's how desperate people are to get into this EV space and compete with Teslas. They're like buying their rival or not buying, partnering with their rival for $2 billion, all for nothing. They're going to get nothing out of that deal. And you also, like with Ford and Rivian. I think it was last year, Ford and Amazon had like this key partnership stake in Rivian to produce like a chassis or car, a truck like Model EV. What came out of that? Nothing. Of course, Nikola kind of they're trying to do the whole EV thing. It's basically coming out allegedly as like a fraud. I don't know. It's just that's still ongoing, so I won't comment on that. But these are their competition, and their competition is not even close. And you see Pivot to Battery Day, which came out with all this cool stuff. I thought it was really, I nerded out on it. I didn't understand a lot of it, but I thought it was pretty cool. I haven't finished all of it because I'm really trying to understand like where they're coming from. But from what I saw, hey, they're trying to redo not just kind of like the battery, but the process they go into the battery. They're positioning themselves as a much stronger company in general. They're basically like disrupting themselves before someone else can disrupt them. So all those things taken into consideration, taking the chart into consideration, I really like Tesla coming into this week. Like I said, for like that catalyst for deliveries, and then also they have earnings coming up on 10/28. I want to say. I think it's 10/28 is the quarterly earnings. So, that's going to be real nice to start looking at that. So Tesla's on my watch list. The next one coming out is another one that I'm recycling. And just know that, hey, I'm probably going to watch Tesla every week. You're going to see that mug. But hey, that's because I like it. It's because it's a very day tradable. Like these are not like small swings here. On Monday, you could have made basically 10%, or onto Tuesday, you could have basically made 5 to 10% twice or 3 times. And those are just those intradays. It's not even taking into consideration dips and buying it back up. So that's why I think Tesla is very day tradable, definitely swing tradable. But the other one I think is super day tradable and swing tradable is CostCo. And the reason I was watching CostCo last week, I was kind of more like on the fence with Costco because I thought that Nike, which also was a hitter last week, what's up? Nike was also what I'm watching this week. Anyways, sorry, Lululemon was the one that I was like, hey, between Costco and Lululemon, I was like Lululemon last week as a reversal earnings play, and the same difference with Costco now, just reverse. So now those are kind of reverse for me. I'm watching Costco because they came out with fucking stellar earnings, but the market didn't give a fuck about it, you know? When I was looking at it, I was definitely seeing it last week as a descending triangle. I thought it was going to break out lower. It actually found really good support here. That's kind of what I was saying. It was going to come and try to test this too, or get close to this 200 EMA. Actually didn't happen, which is great. You know, it did find support, 921. So what is 921? It was like that Monday. Found some support and bounced off of that. Anyways, but still, you know, you had earnings on Thursday, Friday, 924. 924 was Thursday after hours, and you still see nothing fucking happen. But this is the thing about Costco earnings: they're in terms of in general, they're consumer cyclical, consumer defense. So that's been a really hot grouping over the day, week, month, 3 months, year, half year. Like it's been really steady, especially since kind of as we saw with QQQ. You know, tech has been more like cooling off, right, or correcting. Consumer cyclical, consumer defense has been super hot. You know, Costco's in that bucket there. They're in looking at the earnings specifically. Hey, they essentially doubled their digital sales. So they're making the pivot to more digital, right? Especially during COVID. The same store sales increased by 11%. Now, I will say that they're seeing less people go into the stores, but while people are in the store, so they're seeing less foot traffic to the stores, but while people are in the stores, they're actually buying more, which makes sense. When I go shopping or grocery shopping, you know, one and a half times a week. And I say half because I'll go shopping one time in the week, and then like the other time I'll just kind of, during the week, I'll just pick up something I need along the way, maybe like little things I run out of. But I try to definitely do it all in one day, so I don't have to keep on exposing myself to other people, and it's just easier for me. I go at different times. Anyways, so yeah, and it makes sense to me, like that people are going less but buy more, because that's exactly what I do. I go less, but I buy more when I'm there. But still, the market kind of didn't really like, I guess, you know, but also it was a weird day on Friday. So maybe, hey, and that's exactly why I want to look at it now. I think people were kind of, you know, profits and revenues beat expectations. It's still traded down on Friday. They were kind of saying like, hey, as we go back to normal, as we start normalizing this like behavior, like post-COVID, like is Costco going to like keep, you know, the same kind of trends? And that's hard to say right now. But at the same time, I think that, you know, right now, it beat expectations. Really, really awesome. But also I like Costco because it's very conducive to day if you want to day trade. But it's also really good for swing trading as well. You know, you definitely see a lot of good. And what I like about it is very channel-y. You know, you have these clear kind of channels that you can kind of play here to say, okay, cool, this, okay, that, you know, or for here, you know, like you can definitely play channels here, and it just keeps on doing the same motions over different days, which I love to do. And there's a lot of money to be made there when you kind of find those support and resistance levels. So I really like Costco this week, same as Lululemon last week, for a reversal from the ER play. It found really good support here, and now let's see like what the market wants to do. Again, I'm watching, I'm not trading. Damn, you saw this really high like volume for selling coming. Like, look, it's over average, just selling off real hard, man. People hated that, but it was great earnings. So I think we'll kind of see a correction of that, hopefully coming up here soon. And then there's going to be a lot of money to be made there when it kind of decides what it wants to do, you know. But you still have, you know, as it was trading as a high of 363, right now it's 342. So you have a good, you know, $20 in there, $21 in there to really play in that area, you know, especially if it breaks this key area of resistance here. It's had that resistance for multiple days, going back, you know, a couple weeks. So once it breaks that, or if it breaks below, we'll kind of see, and I'll think about how I would play that. You know, I'll buy the break of or play the reversal from, you know. But it definitely broke out of this downtrend that it was in, which is great, and I think that bodes well for it, like into the near future. So Costco is definitely one I want to watch this week. The other one I did recycle from last week, but I was so fucking bullish on this mug last week, and it blew it up for me. It was a runner, this guy, and I love it. You know me, I love Nike in general because, hey, I'm a Nike fan, but also, you know, I like their clothes. I like, you know, socially how conscious they are, but also I like that they're basically, over the past couple of years, they really moved to a more digital footprint. So they were kind of ahead of the whole like direct to consumer market they still are, for like specifically like the consumer sphere in terms of like apparel and shit like that. Kind of like, you know, if you look at what Nike's doing in terms of what like their closest competitor to me, Adidas or even Under Armour is doing, their apps are basically a seamless transformation between different things. They have an app for the sneakerheads, right? They have an app for workouts, regular workouts. They have an app for running. They have an app, a digital store, and these are all different apps that connect to their same e-commerce ecosystem. Like you can be on a run, stop, like use the running app that's tracking your run to go and take you to buy shoes. Like I think that's the smartest thing that they've done, or that's super smart, and you see it in their earnings. So Nike had earnings last week on 9/22, and if you look back on this, and if you look back on it, so let's just break it down into the day, right? We're looking back over 9/22, and this is what I was seeing. This is what I was loving. If you get in early, and what I was saying, watching it Sunday, seeing what it's going to do. I got in or I played it on Monday. I was like, cool. It was kind of like consolidating, moving to the right, and then this huge breakout with the earnings came in on 9/22 after hours. I actually didn't get it all the way up here. I was like, hey, I got my 11%, whatever. Like I was only aiming for 5, got like 11%. I was out like a light. I was like, great, this was for me. And then I was gonna play the reversal on it. It hasn't. It's been, so it hit the peak, right? It's trading on the all-time highs. It's gonna cool off. We'll see where it ends up. But basically from the earnings last quarter was they were amazing. They had a 75% increase in their digital penetration. They had great growth in China, and you saw more of the same, if not more, this quarter. Their digital sales were up another 82%. Their digital sales alone. Profits higher than expected. Revenue was kind of flat, but the revenue was kind of flat, but they were still ahead of expectations. But since their digital margins are so much better than their non-direct to consumer market, so there's like selling to or selling via like Academy or Dick's Sporting Goods or whatever. Since they're doing it direct to consumer themselves from their digital channels, they have a better margin. And even though revenue was a little bit flat, profits were still fucking higher than expected, right? Which is awesome, which is great, what you want to see. So I think that like the same kind of sentiment you have with kind of or the market seems to have with like Costco was like, is it pre-COVID or post-COVID proof? I think you see with Nike that there are going to be, because they're moving quicker. They're trying to be more direct to consumer. They made all these plays a couple years ago, but it was going to take a couple years for those investments to their digital platform and their restructuring at the organizational level to kind of to bear dividends. And that's what we're seeing exactly now. And they kind of timed that perfectly, COVID, unfortunately, I mean, it sucks, right? But they timed it in a way that, hey, like they were in a better position. I mean, what is Under Armour doing right now, right? What is the closest with things like what Lululemon, right? And yeah, you see, it's great, but at the same time, like they're that's not a direct competitor to me. It's more Under Armour. It's more Adidas and the pure shoe like play like that, and they're not even close. As someone that likes Adidas and shit, I'm not saying I don't like them. I'm just saying like they're not in the same sphere in terms of like their digital offering to their customers, right? But yeah, into the digital sales, they had Nike had a 900 million incremental revenue just with digital sales. And they have a 200% growth in their e-commerce app, which is great, amazing. 100% growth in their monthly active users on their on their e-commerce app, and the 200% was like for the e-commerce, and the 100% growth in the monthly active users for their their fitness stuff and shit like that. So it's a funnel, and they're all going into the funnel, which I thought was awesome. I mean, and the direct to consumer and product innovation is moving at such a speed, and they have so much new shit coming out that's really cool. I mean, they have like something called Space Hippies. That's basically like sustainable shoes. Like they have Nike Yoga. They have maternity wear. They're going into all these different verticals in that like subgenres of fitness. It's so cool like how they're doing it. That's what I'm saying. I geek out about it. I like it. I'm a Nike fan, but also I love what they're doing from a company standpoint and a chart standpoint. And hey, it paid off this week. And I think, like I said, watching that dip, watching to see where it goes, because it's definitely going to cool off after earnings. It's people are taking profits. People like me, they're dumb. They're taking profits. It's going to go down. We're going to see where it evens out. And I think that you'll see kind of like a similar kind of bounce this week, I would hope, after it kind of finds that new normal for Nike. But yeah, this was a great one. It was up at highs, I think 32% after earnings. So that when I popped the trigger on it to sell, so that was great for me, at least. And retail stores are coming back into play, right? So they have their whole digital offering that they have now, which is a new muscle that they're flexing. But also, retail stores are coming back. Slowly but surely they're coming back. So that's just another margin or another revenue or avenue that they can use, right? So I think that's going to be awesome. And of course, with before the earnings and after the earnings, they had a bunch of price target increases coming out. I didn't see really anything like lowering them, so that was great as well. I thought as well. And if you look over the week chart, this is something I'm starting to watch a little bit more. I got this new book. It's called How to Make Money in stocks. And basically what I thought was interesting about that, and I don't really look at, is the week over week level, just because like I'm like, I don't give a shit. But I thought that it was super interesting kind of how they look at week over week to kind of look at longer term investing versus trading. And it follows really good patterns. It's following that 10 EMA. When it gets too far away, it hugs it back. When it gets too far away, it hugs it back, rides it, hugs back. But that trend line is still really improving. And I was looking at this earlier. Hey, it popped out of that trend line that I was running, and now it's like at a whole new level. And we'll see it come down. Like, this is day over day. We'll see where it comes down, because it's definitely in a downtrend now. You saw people profit taking right after they bought in, but still, like the RSI is cooling off, but the MACD's kind of diverging to look really good. So I think Nike's going to be a really hot one for the next, for me at least, next couple weeks to at least watch, right? The other one I'm watching this week is Penn National Gaming. And the reason I like Penn National Gaming is because they recently, as of, I think it was like a Thursday or something, they announced, 9/25. So that was on Friday. They got the announcement of it. So Penn National Gaming has been on a tear. And basically, it's online betting. So if that's not your jam, I get it. But at the same time, I don't really give a shit like what industry stuff is in, as long as it makes sense. And Penn National Gaming was something that I have heard about from a few people, a few podcasts I listened to before this whole earnings thing. The people were like trading it heavily, right? They were really bullish on it. And then, it got to a point where they just had they just had a stock offering or more shares being released. So it's bad if you're an investor before it, because basically you're diluting the share. The share price was at $61. I think that's where the offering is. Offering or dilution, however you look at it, is at $61. So it was trading as high as, $76, $77 all the way down. And I think you see that if you look over into the like day over day, you see kind of where it shook out to it came in on Friday, the price, and basically the offering is like, hey, they're offering more shares at this price. So investors kind of use, or traders kind of use that as a proxy. This is what the price should be. And it's no coincidence. They said it was 61. The price dropped to 61. And now you see that good bounce that's coming in. I mean, this would have been a great play on Friday. I just wasn't watching it. But yeah, I heard about it. Wasn't watching it though. But you see that price started coming in at 61. 61.5 is the low it got to. And then it bounced off of that line there. And I think that it's going to be interesting to watch here for a few things, because fundamentally, it doesn't change the company like an offering. It doesn't change that the company just needed to raise money. If anything, my argument that it's actually better off now, because they have more money, all the money they used from the offering that came in, to use that to grow the company more. So fundamentally, it's the same. So all that hotness, all that heat is still there. Week over week, same thing. It's super extended. So right now, I would expect it to come down a little bit. It's very extended on the week over week. Looking at the 10 EMA, it's fucking flying high. It's not even touching this thing. So this thing is a hot runner. Even if you look at week over week, that moving average convergence divergence shows no sign of slowing down. The RSI is a little bit hot, 87. That's fine. It's kind of peaking down here, 79. I would want it a little bit lower, and I think we'll see that because it's definitely extended off of that line. So, but this is for me something that I'm watching. May not play right away. I want to see what it's going to do, because right now, this is no coincidence either. It's off that 60 line, that 10 EMA, or sorry, that's the 25 EMA on the day over day. It touched that line twice. It touched that support twice. Now we'll see what bounce off of it. And I think that you can play it two ways. You can wait to see if it kind of flattens out and consolidates and moves to the right, or if it breaks this important resistance here at 76. I think, hey, it's hot. It might break that support of 76. You see all this. See, and that's what I love about lower the price, great. And sometimes you have to go lower to go higher, as we saw with Tesla earlier. Sometimes you got to dip down to go higher. And what you saw is that in that price, you see sellers coming, you see people taking profits, getting out, the day before. And then you see people coming in at that new 61 price, because now they feel comfortable that, hey, I know that this is the value that the company sees itself. It's a good price for me to get in on it. And I think it's perfect. It's, a few bucks over that. So you're kind of in the middle of support and resistance. And, I said, hey, don't be a sucker and buy in the middle. Wait to see what it's going to do. So I would either see one, if it comes down to the 61 level again to test it. It's already done it a couple times, so maybe not. But also once it breaks this resistance of 76.62, or 76.62 looks like. Once it breaks that, then kind of using that as, when I do that, when I trade all-time highs, I try to keep a tight stop loss. So like if it breaks under that, breaks and closes under it, not just like pokes under it. This is like a poke, right? This poked over that line. But once it has a real candle body over that, then I'm interested to see what it's going to do. And then I just set a stop loss. And what I love about that is I know what my stop loss is going to be. It's going to be the 70. It's going to be like 50 cents under this. If it breaks that and closes, then I'm gonna sell it. But you can trade it either way, and that's kind of how I'm gonna do it. I'm gonna wait to see, hey, is it gonna do this or is it gonna break that? And hopefully it goes up from there. But if not, I'm gonna set a really tight top loss to sell if it kind of breaks down. I hope it just consolidates and moves sideways, because then I feel very comfortable about this price at 61 because it's tested it before multiple times, but it's also following that trend line for the 25 EMA. I don't feel as comfortable here, so you can play it either way. So, but Penn National Gaming, like I said, you generally see after offering, like the price kind of, or at least offerings that I've been a part of before in terms of like watching them, you usually see that price kind of stay there for a little while. This one didn't actually. It kind of, it definitely shot up literally the day of. So that was a little bit weird to see. When I was checking today, I was like, oh, I'm sure it's going to be around that 61 line. No, people came in and bought the shit out of that. So hey, but it's a hot one. And the great thing is it looks like it's going to keep doing that, because hey, when you look at the day over day, you see this fucking RSI right here. You see this RSI coming back. It definitely dipped, 53. It's been running pretty hot for a while. You just saw this COVID dip. Okay, I get it. But it's definitely still running. The RSI is picking up. And the great thing about this one is the RSI can go up 75. It's trading up 8 or 80. So it's pretty well off the highs that it can run. And the other thing, it was bullish for a while in terms of the MACD looking day over day. It's a little bit sell offish, not sell offish. It's a little bit cooling offish. And the difference is like that divergence isn't really steep. Damn, I went real far. That divergence, so it's definitely bearish now. You see this little red here, small red. It's a little bit off of these lines, but it's not like a sell off. It's like a cooling off, a correction maybe. I don't know. Man, sorry, I'm caffeinated as fuck. But anyways, yeah, another one, Penn National Gaming. From a chart perspective, it looked great to me. They're like, the catalyst can be anything, and honestly, like if like the catalyst in this instance for me is the dilution or offering, and if you're already in, you're kind of like pissed off, but I'm fine, because I'm not in it yet. But this is a more interesting price to me, because I pretty feel comfortable. But also, like, I would maybe wait a little bit, because like looking at this double top here, this is super fucking strong resistance at 76.52. So it's not a little pump. It's gonna be a bitch to break through that motherfucker. So I'll maybe wait to see kind of what happens, but play it how you want to play it. I would play it basically, hey, let's see what it's going to do. I would feel comfortable, like I said, cooling off, or once it breaks and holds, because it hasn't been able to do so yet. All right. Yeah. So to summarize, like I said, hey, I'm just showing you what I'm going to do. I can't really say, hey, do this, but Tesla I've been watching. CostCo I'm watching this week. Nike I'm watching this week again. And these are the three I've been watching. Penn National Gaming is another one. PENN is for that one. And I really have never traded like DraftKings or anything like that. But hey, catalyst coming in. It's fucking football season. We got NBA finals. Shout out to Lake Show. We got fucking Stanley Cup. We got, I think, golf. I'm not a golfer, but I see people golf sometimes on TV. We got the NFL in week 3. My team's 0-3, but that's fine. So you got baseball going on, so you have all these sports. So I think that's why you're seeing a really fast acceleration, and you have more states that are like legalizing, and so more opportunities into different states being like letting like consumers like trade in like online gambling and stuff. So hey, I can understand the moral like dilemmas for some people, but for me, fuck it. If there's money to be made, this is a really sexy chart, honestly. And it can break out easily and move up. That's what you see here. Some cooling off, that's fine, But still, hey, yeah, Penn National Gaming is the other one. So I'm going to talk real quick. My fifth and final one is actually not even traded yet. And the reason I wanted to talk about this one is because it is called Palantir. So I'm just going to lump all the IPOs this week, because there's like 9 or 10 IPOs that I saw that are releasing this week. So it's about to be a hot end of the year in terms of new companies coming into stock trading, or to be able to be traded into the public sector. But Palantir is going to be a hot one. Palantir and Academy are two of the ones that I was interested in when I saw them. I think there's around 9 or 10 IPOs this week. Palantir is going to be traded PLTR. I believe that's the symbol it's going to be. But yeah, the IPO market has been red hot. Even with COVID going on average, you see about a 22% increase from the price target as it was released to what it ends on the first day. Even Snowflake, as we saw, Snowflake, sorry if you hear my dogs barking, but if you saw Snowflake, they actually doubled in the first day. So I think there's going to be double their share price in the first day of trading. Average is 22% so far, but Snowflake doubled that, right? In this double his price in the first trading day. So you have to really catch it at a good price. It's really hard if you're not in the know. This is actually going to be and I've done it before. It's not easy, but it's not impossible. You just have to time it right. You have to be in the news a little bit, but sometimes you can open up your trading app and you'll see that it's up. I haven't found anywhere that really says, oh, this place or this started trading. It can basically start trading, I think, any day, any time. It's really weird how they do it. In a general day when it's going to trade, but you don't know like what time it's going to trade. So it's all kind of luck and being lucky enough to. It's difficult, not impossible to catch IPO. Is what I'm trying to say. At the price you want, you can catch IPO at any price eventually, right? But it's about catching it at the lowest possible price. I guarantee you, Palantir is not going to go down when it releases. It's going to go up. And the reason I say it's going to go up, I would say 22%. I mean, it's at least, I would think, going to do the average. I'm not saying it's going to. I'm going to say I would think it was. If the average for IPO so far this year has been 22% on the first day, looking at Snowflake double its price, this is a similar. It's not Snowflake, don't get me wrong. But I think a lot of people miss Snowflake, didn't get the price in Snowflake, couldn't get in on it. And this is a similar enough play, being tech, being big data. So Palantir is basically, it's a predictive. It's basically big data and analytics, right? Which is, fucking hot as shit. It's tech. It's super niche. But what I think is interesting about Palantir, and maybe you have some qualms with kind of like that industry, but it's basically like a predictive surveillance technology that's used by fucking government and like both in the United States and abroad, for things like, it's like the CIA uses it, NSA, FBI, ICE. They all use this kind of software. And it's basically like, it's a predictive surveillance technology that's used by a lot of different governments. But what does that mean? It means government money. And government money is sustained. When you have a government contract, especially multiple different departments in your government and other ones as well, that's just money that's just reoccurring. You don't have to worry about that. And you kind of see that in Snowflake's price. So to be fair, they're never been profitable, right? But they anticipate a 42% revenue growth to 1.1 billion this year. They anticipate a revenue growth of 42% up to 1.1 billion to 1.1 billion. That I was trying to say. But like I said, they're not profitable yet, but they have reined in their losses for the past 2 or 3 years slightly. So they're being more profitable, and they're getting better at losing less, which is always like a lot of maybe 95% of IPOs are not profitable when they go when they go public. But this one is, at least it has a lot of catalysts. It's a government play. Not just our government, other ones abroad. It's big data and analytics surveillance at that type of level. They're growing more, they're growing fast. 42% is nothing small, and they're losing less, right? And the other thing about that is, like I said, people miss that Snowflake play. Like, that price just blew past what I thought it was going to do in the first day. And I was like, fuck that. It was already not something I was going to do. But this one is maybe a little bit different. It's actually direct listing. And what that means is that there's like a different IPO process. It's not like an SPAC or whatever. It's not like a traditional IPO route. It's kind of one that, like, if you have shares and you're you're a previous investor or you're an employee, you sell your shares on the market to people that want to buy it. So there's a little bit of difference there. And I will say that there's some kind of stipulation in this one that you can only sell 20% of your sellable shares until next year. So there's going to be a lot. It's going to be scarce, So I think that price, you're going to definitely see that kind of balloon out. It's going to projected to start at $10. We'll see where it actually is, because that's what we're expecting now. It doesn't mean that's where it's going to happen. But $10 is where I'm kind of see. It was like $9.71 or $10. It's kind of in that area. So if you can get a low, you get a low, But at the same time, like I said, keep in mind that the average IPO in the first day is moving 22%, and then after a couple of days, you kind of see, and you saw the same with Snowflake. You saw that run up, you can see it cool off. So if I don't get on the run up, I'm gonna get on the cool off. Hey, I think I'll trade it eventually. I just don't know exactly when or how. So that's my running into it. I'm gonna run through it again. Just wrap it up. Hey, Tesla, I'm watching. I love it. Showing strong support. It's coming up with some tailwinds. Great battery day. I thought market didn't like it. Costco again, reverse on the earnings play. I loved it. I did that with tried that with Lululemon last week, and I think this is going to be more of the same, if not a better position this week. I think Nike again reversal. It did have the run up, but then you see the cooling off. So I want to see what's going to end up, and then play that again. Penn National Gaming. It had that dilution or offering, which to me makes it more attractive to me. Palantir. If I can get it at a good price, I'm gonna try to get it at a good price. If I can't, I'm not gonna chase the price up. I'm going to keep that 22% in mind in terms of like, I don't know what's going to do that, but I know that there's a history of that. And I think this one has a strong case to do that or better. So that's how I look at it in terms of like at least conceptualizing the price that I'm willing to pay for that, right? So we'll see about that. But Catalyst Corner, party takeaways and social. Barclays, if you're familiar with Barclays, they're basically like some analysts and shit. They upgraded cruise lines for some reason. So when you talk about cruise line, Norwegian, Carnival, Royal Caribbean, to overweight. And I guess they're signaling that it's a good time to start looking at them again. I think it's too early for me, but hey, I think that, I'm always wrong, right? It's about being wrong less and being right more, or at least controlling how much you're wrong by, I wouldn't say. But, it's a weird one to me that Barclays would come out and say, hey, cruise lines, let's start buying those motherfuckers. Because, people are not traveling yet, but people, I think, are like rescheduling their travels that got canceled this year to the next couple years. So maybe they're seeing some of that into play. But at the same time, I think Barclays, hey, is saying, hey, maybe it's time to start looking at them. I'm more on the real estate side. So if you're going to start looking at industries that are going to start coming back in the, I think cruise lines and stuff will eventually come back. I think it's a little early for that, but I think the more interesting one, if you look at the grouping perspective, is real estate. Especially as more companies get back to work and people feel safe about traveling again, you'll see kind of those bookings come in for airlines to go places. You'll see people going back to the office, especially in the start of next year. So in the next couple months, we're already fucking at the end. It's almost goddamn October of 2020. What the hell? But yeah, so when I talk about next year, it's not that far away. Like it's literally like 2-3 months away. So as people start coming back to the office, as we get a vaccine and stuff, I think you'll see real estate come back, and especially as people start traveling. Like I said, I really appreciate you guys tuning in. If you give me a sub here, that'd be great. Also, real_bullish on Twitter, Reddit, StockTwits. I think I'm gonna make an Instagram. I don't think I have one yet. I'm not really active on Reddit, so maybe even on Twitter. Hey, connect with me there. Drop a sub here. But I definitely appreciate y'all tuning in. And like I said, protect your chicken, because the market don't give a fuck about your money. You gotta give a fuck about your money. All right, peace.